Good morning and welcome to another session with Legacy Capital, where we have to dive into the market, where we are looking at fundamentals, we are looking at the dollar index, and we are looking at gold, XAU USD, we are looking at GBP USD, and we are also looking at the Euro USD. If this is your first time joining us and you have not yet subscribed to our channel, kindly subscribe, leave a like, a comment, and also share our videos. And note that every weekend we share a market forecast for the coming week on this particular pairs we have just listed. Take a ride as we look into the fundamentals. Starting with fundamentals on Monday. Monday will be a bank holiday, so there is no major fundamentals on Monday. And on Tuesday, we don't have any high impact news on Tuesday, but on Wednesday from 8:15 a.m. Central African time, we'll be having the French flash manufacturing PMI for the euro. We'll also have the French flash service PMI for the euro, which for now, if you look at all the values, if you're looking at the values that are projected, you'll see that it's actually maybe seemingly the euro might be weaker this week, but we should just let it open. If to say that the actual comes out to be greater than the forecast, then it means euro is stronger. If the actual comes out to be lesser than the forecast, it means that the euro is weaker. And at 8:30 we have the German flash manufacturing, which also will be affecting the euro. At 9:30 same Wednesday we have the French flash manufacturing, the flash manufacturing PMI, which of course will be affecting the Great Britain pound. And we also have the flash manufacturing PMI at 2:45 p.m., which will be affecting the United States dollar. In all of these cases, if the actual is less than the forecast, then it's not good for the currency. If the actual is greater than the forecast, it's good for the currency. At 6:15 p.m., the Bank of England Governor Bailey will be speaking. So that's a high impact news. On Thursday, the only high impact news we have is the unemployment claims that represents the number of people that are claiming for unemployment in the United States, which will be affecting the United States dollar. On Friday at 7 a.m., we have the retail sales for the Great Britain pound, and then we have the SNB chairman Slager who will be speaking for the Swiss franc, and we also have core retail sales for the Canadian dollar at 130. So that's what we should be expecting as far as fundamentals, high impact fundamentals are concerned for the week ahead of us. From there, we should look at the DXY. If you look at DXY properly, you'll see that the whole of last week, DXY still maintains the downtrend, and the whole of last week, DXY have been almost in a consolidation. DXY have been in a consolidation the whole of last week. So what should be our expectation this week? We want to see into it this week that the DXY pushes down. We want to see that the downtrend continues. We want to see that the downtrend continues this week, maybe to this level. This where we are expecting that the DXY should get to this week from the daily time frame. If we move to the 4 hours time frame, let's see what we can have from there on the 4 hours time frame. On the 4 hours time frame, you'll notice that right from last week there had been a great consolidation. Right from Thursday to Thursday this week, there had been a consolidation. Friday this week was a public holiday. So what we want to see is to see that the market breaks down to this level and then test this daily key level and maybe retrace a bit. The market can possibly move down, breaks down, test this key level, then retrace a bit, then fall down to this area, which can happen this week and maybe part of the coming week. So this what we are expecting. Or better still, there is still possibility that the market can push up, breaks this consolidation, retest it, then push back to test this. So which of course is a minimal situation. So our focus is to see the XY play like this, this week. So we should be expecting to break the level of 99.40, test the level of 97.910, and then possibly be heading towards 95.228. But before it does that, it must break the consolidation. So when the market opens, we should be expecting to see that the XY breaks the support or the XY breaks the resistance. So that is our focus. That's what we should be looking at. If we want to see maybe clearly on the 1 hour time frame, we should be expecting to see that the market actually have to maybe break the support, because on the 1 hour time frame you see that we have the resistance line, this resistance line, and we also have the support line that the market needs to take out from the 1 hour time frame. So the market can push up to take it out, or it breaks it down since momentum has been building. If you notice, right from this point on Tuesday, the market has been building down. So the market has to maybe retrace from there. We can even have something like a small within the trend line that the market has been failing to build. So the market can maybe break or build momentum from here and shoot up. That is what we should be expecting to see as far as the XY is concerned this coming week. From the XY, let's look at XAU-USD. We're looking at XAU-USD, which of course is known as gold. So we know with of recent times, these have been gaining a lot of strength with the instability with currencies around the world. People have been switching to gold to see into if that it is acting as a safe price, up to the level that at the end of last week gold reached 3,358.14 per ounce. So what should be our expectation this week? So if we're looking at the current price of gold in the market, there are just two major key levels we should be looking at as far as the daily time frame is concerned. And the first key level we should be looking at is this level that has acted as support here. We should also be looking at this base. You remember we have the rally base rally. So why are we looking at this, and how is it important for us? There is a possibility that the market can retrace to test the base that we have here and then rally from there, or there is a possibility that we can have a retracement right down to this zone, which of course cannot take place in the whole of next week. It will be a long-term move. We want to look critically for gold to get back right down to this zone. It will be taking about approximately 3,000 pips. So it's almost impossible. But now from here, it's at least feasible. It's at least feasible. It's at least feasible from here. So 1,400 pips is of course feasible. So that's what we should be expecting. That okay, the market might drop down to this level, or it can retrace back to this level. But now these are the two major key levels we are seeing on the daily time frame. If we move to the 4 hours time frame, let's see what we should be expecting. On the 4 hours time frame, the first thing we are seeing is that the market did retested this zone. The market retraced and then tested a zone that has acted a zone that the market had rejected with. If you notice, there was an indecision at this level. The market had formed an indecision at this level. We have the doji, and from this level now the market retraced, tested the level, and then took out liquidity from there. The market took out liquidity from there, and of course closed as a 4 hours hammer. So what should we be expecting? We will be expecting the market to push further. The market will definitely push further, creating new highs. From the 4 hours is clearly showing that the market will be pushing up. So the market might possibly not even come down to retest this level. So we should just be patient to know that okay, as far as gold is concerned this week, we are looking more for buy positions. On the 1 hour time frame, when we look at this on the 1 hour, you see that okay, at this level the market created a morning star telling us that there is buyer's momentum. So the first thing we should be expecting this week is to see that, okay, the market, since the market has already shown us on the 4 hours, created the hammer, telling us that the market will buy, what we should be expecting this week is to look for a convenient entry, then wait for the market to push to the level of 33.57, 3,357.531. The market can get to this level and possibly retrace from there before gathering momentum. So the market can get to this level and then push down from there, and then maybe market gets to the level and keep creating new highs. That's what we should be expecting. But now, having already a hammer form at this level on the 4 hours, and having a morning star at this level, we know that there is a slim probability for the market to maybe break this zone, to move down to test the levels we have seen on the daily time frame. It's somehow maybe tedious for the market to get down to this level, so we might see the market pushing up more, pushing up to create new highs. Then from there, what should be our expectation be? If to say that for any instance, if for any reason the market pushes down to this level, retests this zone, we should look for sell positions to this level. That should be our focus. But if the market fails to do that, we shouldn't. We should just be looking for buy positions, because as it stands, gold is in a serious bullish market. Looking at the Great Britain pound, United States dollar, you will notice that it's actually pushing up as we anticipated last week. We anticipated that it was going to push up to test this weekly level. So our expectations actually is to see that it pushes up to the weekly level. It moves right up to the weekly level, or the weekly key level. Once it gets to the weekly key level, we should be expecting a retracement. So on the daily time frame, our major concern is to see that either it pushes to this level and then retrace back and then push up to break it, because it has been gaining strength. The market has been gaining strength since from January. It has been an uptrend, so we should expect that it can push up right up to this level, then retrace back, and gathers momentum and break the level. That's what we should be looking at. Our expectation with Great Britain pound, United States dollar, is to see it gains more momentum, then breaks the weekly key level to create a new weekly key level with respect to price action. So once it breaks this level, we can be expecting it to get maybe to this level. Once it breaks this level, we can be expecting it to get to this level, and maybe subsequently this, and probably this. So we should watch out for that, and we should be looking for bullish entries as far as GBP USD is concerned on the daily time frame. Then from there, the thing we should be looking at, we should look at the 4 hours time frame to maybe look at our demand zone. Remember, whenever the market is in an uptrend, we are looking for buy entrance. We are not looking, we don't want to trade against the market. If you look critically, the market has been creating or trying to create a rising wedge here, telling us that the market is building momentum to break this zone. So we should be expecting to see that the market breaks the zone, just as we are looking at on the daily time frame. So on the 4 hours, we should be expecting to see that the market pushes up to the weekly key level and maybe retrace from there and push to break this zone. So we should pay special attention. There is also a possibility that the market can maybe drop down to this level. The market can retrace to this level before buying from there this week. There is also such a possibility that the market might drop down to this level, the level of 1.3414. The market might move down a bit before pushing up. We should also be expecting that we can see a scenario in the market like this, and then it moves up, then retrace back, then pushes up. We can also see that. We should be open to that. But now we should always let the market communicate to us. We should not impose on the market. From there, let's look at the 1 hour time frame to see if we'll see any clear communication on the 1 hour time frame. On the 1 hour time frame, notice that this entire zone has had numerous weeks, close to 6 to 7 weeks, telling us that price action has consistently rejected this area. Price action has consistently rejected it. So we should just be expecting a push. So the second scenario might be seemingly impossible. We should just be expecting a push to the weekly level. So this week on GBP USD, look more for buy opportunities rather than selling opportunities. Onto Euro USD, you notice that it has been bullish all this while. So we are also expecting it to push to this level, then maybe it can retrace to test this base, and from there it pushes up. That is our expectation. The same movement with GBP USD. We should be expecting that it pushes up, then maybe test the key level, daily key level, retrace back to this zone, and then it keeps moving up. So we should also be looking for buyers or buying opportunities. But in case of everything, I don't think that Euro USD will be able maybe to break this level. I don't think it will be able to break this level. We should just believe that there could be a possible retracement to this level. But if the market opens with a gap, then it's maybe not possible. Or the gap above the daily key level, then it will be impossible for it to retrace. But if it doesn't open with a gap, then it can test the daily key level, retrace back to test this zone, the zone at 1.13893, then pushes up from there. That's what we should be expecting on the daily time frame. With the 4 hours time frame, we should also be expecting to see that, okay, on the 4 hours time frame, price had actually rejected this level here. Price rejected the level the first and the second time. So if price is pushing to the level, then we should be expecting to see a rejection, or price can push up, test the daily key level, then drop down to retest it for the 4th time, then move up to break the key level. That should be our expectation. But what we should, our focal point in this week should be seeing price move above 1.4970, or in case if price happens to break below this level of 1.1260, we should obviously be expecting to see that price to get 1.0930, which is unlikely the case, because Euro USD have been gaining momentum over a long period of time. Then from there we can check the 1 hour time frame, and we notice on the 1 hour time frame that is the area 1.127 is actually a key resistance, key support zone, which maybe price can just falter to come there to gain momentum or to gather momentum and push up. And if price is getting there, then we should look critically at the demand zone that is below that zone, because price might spark down to touch the zone. So that's what we should be expecting in the coming week. With that said and done, trade with effective risk management and make sure you make a lot of profit more than you make losses. Stay well. Thank you very much.